My name is Deborah Gallant. Today's program is called Getting the Most Out of Your Financial Professionals. Our agenda is we'll do introductions of our presenters, talk just a moment or two about Entrepreneurs Forever. I always mention our upcoming programs because I found out that when I didn't do it beforehand, I never came back to it to do it at the end. I always forgot. So now I do it at the beginning. We'll have about an hour of a presentation. And if you have a clarifying question during the presentation, please do feel free to raise your hand or type in the chat box. But mostly what we do is we record the first hour, and it's a pretty straightforward presentation and a conversation with our presenter. And then we stop recording so you can ask your own questions of our professional. And Chris, you're not charging us your hourly rate for those questions, right?
Not yet.
Not yet. Okay. Entrepreneurs Forever. Our mission is to empower small business owners to grow thriving businesses that sustain their families and support their communities. We mostly do that through monthly peer groups, and I believe most of you are members of our different groups. I am, as I said, senior program manager at Entrepreneurs Forever. I also facilitate two of our groups. And Chris Pentrak, would you like to introduce yourself?
Yeah, sure. So I am an owner of a couple different franchise systems, but the one I operate day to day is supporting strategies. So we offer bookkeeping to controller level services for businesses in the $1 to $20 million in revenue range. So we have a team of accountants that get businesses the financial reporting they need on a regular basis. And then I own a cost reduction franchise as well as a property management franchise is the newest thing. So most of those are minimal hours spent and mostly on supporting strategies here
Great.
in
Well,
Pittsburgh.
so Chris and I came up with this topic because we know lots of you are looking at your taxes and your financials from last year, and you're probably going, "Oh my goodness." Well, here's the thing: trying to give, I guess, about 15 of you on the call, trying to give you all tax advice is really hard. But we can give you advice about how to use the people you already are engaging to get great insight and advice from them. And we think that many of you probably haven't tapped those resources the way you might, and that's why we brought Chris in for this topic. Again, the upcoming programs, so I don't forget to mention them. Metrics that matter, diving into your Google Analytics. I don't know if any of you know this, but if you use Google Analytics on your website, they changed the interface last year. It's now called GA4. And it measures things in different and interesting and unique ways. And I have a Grow with Google certified expert coming to talk to us next month, Maria Elena Duran, Monday, March 18th. And then on our Forever Forward on Friday, March 15th, we're going to do Back to the Basics. Who's my ideal client? Always a worthwhile exercise if you haven't thought about who you want to be selling to. And these can be registered for on our website. If you're not already a member of one of our groups and you're interested in learning more, we have weekly discovery sessions, and you can register online for those as well. And this is a big one. Chris would not have come here today if I didn't put this disclaimer here. This presentation does not take the place of professional advice from your own paid advisors. So please take it under advisement and go accordingly. So, Chris, why don't you talk about sort of the division that you've come up with in terms of thinking about the phases that people are thinking about. And as we get into this financial professionals, I'm going to stop sharing for just a minute so I can attach the handout for you. And in the meantime, I think you could do this without reading this slide.
Sure, absolutely. So I think it's an interesting thought process on thinking through how you define different stages of business, right? You can define it by revenue, you can define it by number of employee, or probably the two most used ways, right? But for purposes of this group and this discussion, I think Deborah and I have these three stages that are startup. So it's you, you're a solopreneur, you have a product, you have a location, maybe you have a service, you're offering that, you're generating revenue, your expenses are fairly limited, you don't have a payroll yet necessarily. Two is it's more than just you, right? You're beginning to scale, you have help, you have a team. Maybe that's in form of outsourcing certain things. Maybe that's in the form of a contractor. Maybe that's in the form of actually building out your own employees or team of employees. And then I think three is you're growing more substantially. A team is now a thing. You have an internal payroll with multiple folks. Your sales are many multiples of what they were when you started up, and you now have many additional challenges as a business owner from what you did when you first started, right? You're beginning to think through things like security and operations manuals and risk mitigation and employee handbooks, et cetera, right? So a more complex business could be defined in many different ways, but I think you're really beginning to scale, build a team, and build your business from that startup phase.
So as we go through today, we might refer to this mostly applies to a stage one or a stage two or stage three. There's nothing hard and fast about any of them. So you might be a solo, but have contractors. So maybe sometimes you think about yourself as a phase one and sometimes as a phase two, but hopefully that will give you a little bit of a way to think about this.
Yeah, so what's important about this topic, right? It is, I don't think it's ever too early to begin to plan out what you ultimately want to be as a business or what you ultimately want your business to be. And there are many different service providers in this realm of finance and accounting and banking and advising, right? And I think at different levels, there are certainly different costs associated with all of those things. And there's different levels of service that are needed as well. So, how do you find those folks? How do you determine what's the best fit for your business at the stage that you are at? How do you know when it's time to search for a fractional CFO? How do you know when it's time to, or what to consult or advise with your financial advisor? What type of setup do you need to have for your books, right? Your accounting system. What should you be getting out of your CPA? These are all very important things, not necessarily for the stage that you're in, but in anticipation of stages that you're trying to get to and trying to achieve as the owner of your business.
So this is the handout which I attached. There's nothing sophisticated about it, as it's really meant to just give you sort of a scratch pad to take notes as you move along.
Yeah, so just to define really what we're going to talk through today in terms of what's needed at each different stage. These are the pieces to it, right? Bookkeeper could mean many different things. Accountant, we're mostly talking about a CPA firm that most of you have all engaged with in some form or fashion to file business taxes. An outsourced or a fractional CFO. There are many out there doing many different things. Different businesses and different types of businesses may need these services at different stages. Payroll services, once you build out a team, once you have to run payroll, and which is so ever important to every business owner, and will cause you tons of anxiety if that's not set up appropriately. And then your banking relationships, I think, are very key and
And if
have
you're
proven
reading
to.
this and going, what's a PEO? I didn't
Oh,
know either until we started getting this ready. And Chris told me, we'll get to it. It's a professional employer organization, and it may be relevant for some of you who are in service businesses. So stay tuned.
yeah, thank you, Deborah. Yeah, just an important option out there for those of you in Pittsburgh. It's relatively new to the Pittsburgh scene. Many big cities have taken advantage of some of these PEOs over time. Um, Banking and financial advisors. Many of you may have a personal financial advisor. They can play different roles in this world as well. And then banking ever so more important to everybody since PPP and everything that went through in regards to that a couple years ago. So bookkeeper, right? Just to continue the definition of a bookkeeper, what's everything they can do? A bookkeeper at a minimum should be able to set up an accounting system for you. That for most folks in the small business realm is QuickBooks. QuickBooks Online is totally fine for 95% of businesses. A good bookkeeper should be somebody that knows how to set that up for you. They have the capability of doing it. They have the capability of leveraging what it's capable of from a technology standpoint. In addition to that, they should be maintaining regular records for you, right? So they should be handling bill pay, they should be handling debits and credits, they should be handling the activity that's coming into your bank account. Maybe you have a business credit card. All of that should be accounted for appropriately. You should be able to run monthly reports. They can run them for you. Your basic financial statements. Obviously, you may have receivables as a business owner from what you invoice. They should be able to invoice for you as well. This is mostly data entry work at the very startup phase for a business from a bookkeeping perspective.
Chris, is it reasonable to expect, I don't know, let's say you made a really big purchase for a bookkeeper to flag, like, should that be in there on your credit card, or should you have financed this? Is it depreciable? I mean, should you be expecting them to actually look at and understand and sort of flag interesting or different transactions? Or for a bookkeeper, really, you want accurate record keeping and your expectations should end there?
Yeah, that's a really great question, and it depends on how you're defining bookkeeper. I think if you're finding somebody local that has a very reasonable low hourly rate, that's probably an expectation that shouldn't exist in that instance. If you're utilizing an accounting firm that has a bookkeeping arm, that could likely be lumped into those services in terms of, hey, let's talk about this large purchase. Let's talk about how you did it. How if you've leveraged it. Did this make sense? Does the timing of this make sense? Those are all things that potentially you have as part of your package with your accountant.
With an accountant,
I
not a
think
bookkeeper, unless they're done by the same person, or potentially you have your bookkeeper, your accountant, and yourself check in together, correct?
correct, and not that there's not bookkeepers out there that exist that are capable of that and do that. Those are probably mostly solopreneurs who are doing a lot of bookkeeping, right? Maybe similar to a service like ours to an extent, but for very small startup businesses. So there are folks like that that do exist out there. They're just difficult to find, and a service like that is going to be more expensive than the service who's just going to pay bills, make sure everything's accounted for at the end of the day.
So do you want to cover the
And
what they don't do?
yeah, so in terms of limitations of bookkeepers, right, they're not providing any tax work. Accounting probably better defines what we just talked through in terms of, are they going to be able to proactively calculate the cost on a line of credit if you pull a line of credit out, if you take so much money on it, right? Accounting advisement in terms of depreciation and how to prepare for tax time and how to get tax benefit, right? Bookkeepers aren't going to have any type of skill set in that area typically. They're certainly not going to advise you on investments or financial planning, and strategic planning as well is something that is not going to be part of what they provide typically. They can do that. They can provide the information that's needed for those types of things, but they're not going to do anything in terms of those bullet points there. Accountant. So every business needs an accountant to some extent, right? These are your CPAs of the world. I don't think there may be some very simplified businesses out there that you can run taxes through online, right? I would not recommend that. There is a lot of tax advantages out there potentially that a good CPA should be aware of or a good accountant should be aware of. And there's a lot of strategy, very basic strategy that they can help with as well. But accountants can help you in a couple different realms. Taxes, as I just mentioned, they can provide review of your monthly, quarterly, and annual reports. They can give you advice on what they're seeing in the financials. They can give you some ideas around not necessarily strategic planning, but strategy on a go forward basis. They're looking at thousands. The right size firm is looking at thousands and thousands of businesses' financials throughout the year. So they have a lot of different data points, and they can think through a lot of different scenarios and have a lot of experience with what your business may be experiencing at that point in time. Um, Compilations and reviews, many businesses have to provide those for things like bank financing. You may do it in lieu of an audit. You may have a government contract where you need to provide reviewed financials to a certain extent, or maybe even be audited to a certain extent if you're a defense contractor or working as a subcontractor for another defense contractor. And then certainly audits, right? If you were ever audited for any reason by any organization. Fortunately, for profits at the size of small business typically don't need to, but there are instances where you end up needing to. Accountants, they can provide those compilations on a quarterly basis. Typically, some smaller firms likely will do it on a monthly basis as well. That's essentially providing what traditionally is called write-up work. Write-up work is taking your financial statements, taking your bank statements, they're compiling financial statements relatively quickly and generally, and providing you a very general view of your financial outlook for that period of time. What they won't do, some firms do provide regular monthly bookkeeping. That would be their bookkeeping arm of the business, though. They're not going to advise you on legal matters in terms of taxes and things like that. Tax accountants oftentimes will help you in those instances. And then, or tax attorneys, not tax accountants, I apologize. And they're not going to help you with, hey, I have an issue with my capital, or I need a loan, or they're not funding sources or investment sources by any means. So in this world of outsourced CFOs and fractional CFOs, we see a lot of this when we work with funded tech startups, life science startups. We see a lot of it in the nonprofit space here in Pittsburgh, but we see a lot of it with businesses at a certain size. Um, they can do one of many different things. Usually, you're not getting an outsourced CFO that's going to provide everything listed here, but they can be a certain service. There's a service called Focus CFO. That's a group of them locally here in Pittsburgh that have the same approach. There are life science fractional CFOs. Danforth Advisors is the name of one where they'll have a fundraising expert. They'll have a strategic planning expert. They'll have somebody in terms of investor relations and banking. They'll have experts that have experience in taking companies public. So all of those things are something that a fractional CFO can do. It doesn't mean that every fractional CFO provides every single one of those things, though many of them specialize in one or the other. What they don't do, they're not going to do any of the day-to-day accounting work. They're not going to advise you on taxes, and they do not work full-time. Most of them are set up to work for a half day a week, 1 day a week, or 2 days a week is typically how their engagements are structured.
But if you had a firm that was working as your CFO, whatever, couldn't the bookkeeping and tax part be part of it?
If you had a firm, no, so a fractional CFO firm.
Right.
No, fractional CFO firms only just have CFOs for hire, essentially. So there aren't there are CPA firms that will offer advisement services that could blend into this area of fractional CFO assistance. But on the flip side, there aren't many There are not many of these fractional CFOs are solopreneurs like many of you on the call today, right? They are CFOs in different industry that now have gone out on their own and they're selling their services. The focus CFOs of the world, they're just providing CFO level services. And they're not really a firm built to offer multiple things. They just have special, very specific capabilities in the realm of the all of the bullet points on the left hand side there.
Eurasia is asking some questions in the chat. Eurasia, can you unmute and ask Chris your question? I actually think this is one we could all learn from.
Okay, I was asking about financial statements. I have to give one to my bank every year, and
Mm-hmm.
I applied for a loan as well, and they asked for a business financial statement. And I was asking which one does that? Does the accounting do that, or does the bookkeeper do that, or neither? Or would
Great,
help with it?
great question. So an accounting firm could likely help with it. That would be along the lines of a compilation. So what they'll essentially do is in a compilation, they're compiling financial statements based on the information that you can provide them, which is going to be bank and credit card statements, essentially, right? They're not signing off officially or making anything official in regards to that, but they are able to put something together that most banks can look at if you have nothing today. A bookkeeper can certainly go back in time and build out your financial statements. That is going to be a little more intensive and will have a little more detail to it, and likely a little more expensive than that compilation.
Thank you.
Great. Thank you
Yep.
for clarifying that. That was a good question.
Yep, good question. Payroll service. So for those of you who are solopreneurs but S corps, and I think we actually have a bullet point on this a little bit later. You are required to pay yourself a W-2 once the business is profitable versus taking a distribution from the company or a guaranteed payment as you would with an LLC. But once you have employees, you certainly need a payroll service set up. What does a good payroll service do? They take care of everything, right? They take care of all the withholdings from your employees' paychecks. They take care of filing all of the taxes that you're responsible for as an employer in Pennsylvania. We're required to do that at the local, state, and federal level. Every other state is at a minimum federal and state level, even if you're in a state that doesn't have personal income tax or state income tax, you still have unemployment insurance that you're responsible for paying into as well. Payroll companies, I don't think we have this bullet point on here, but I'm thinking of it now. It's somewhat top of mind for me. Workers' comp. I have employees in 20 different states. I need to get workers' comp insurance in each of those states, not just Pennsylvania, where the business is based. So a good payroll company that has a presence around the entire country is able to get workers' comp insurance for you at each of those individual states and handle the audit in regards to workers' comp as well, which is not very complicated, but does take some time, and they have all of those reports handy and handle that for you.
So
Yep.
if your employees are contractors, though, is a payroll service necessary?
A payroll service is not necessary if your employees are contractors. So you can cut a check and send it to a contractor. You can pay them if they send you an invoice directly, you can pay them via a link. What's required for a contractor is the 1099 that you would file for them. And you can do that via paper, you can do that via online. You have to file that at both the federal and state level, but most states sync up with the federal system in regards to that for e-filing.
And then someone needs to send them, is it a W-9 at the end of the year?
The W-9 is for contractors. So a 1099 non-employee compensation form that will file, you need to send it to the vendor as well. The W-9 is what's filed to the federal agency, and in addition to all of the individual 1099s that you file. That is a summary of all of the W-9s that are filed. Correct.
Okay.
But yeah, payroll is setting up a payroll service just to have just to pay your contractors would not be worth the money invested in that. You're paying for the ability to file all of the payroll taxes, handle all of the withholdings, handle the direct deposit. In terms of all of that work, what it can save you versus doing it internally, whether that's time or money with an employee, it's a massive savings for sure.
Do you pay as like a service, or is it based on your payroll? Is it a scalable? How do payroll companies charge their clients?
Sure. So it's a matter of how many different filings you're going to have. So do you have employees in multiple states, maybe multiple local townships and municipalities? But ultimately it's a number of employee, and that price per employee is going to be based on how many different filings there are.
Okay.
Good question. And then in addition to just payroll filings, as you begin to scale, HR support, different payroll, things like templates for employee handbooks, or a service you can call with HR professionals to ask advice on terminating an employee, or what happens if you have an employee who hasn't showed up for work for 2 or 3 days, things like that. They have HR experts who are qualified to help give you some guidance in regards to that. We touched on PEOs earlier. A professional employee organization is more than just a payroll service, but it is something that white collar businesses can take advantage of. Mostly, there are blue collar PEOs as well, but essentially 10 or more employees, generally service businesses or white collar jobs. Ultimately, at the end of the day, they become employees of this. Your employees actually become legally employees of this organization. You're still legally allowed. They're legally allowed to report to you. You're legally allowed to manage them, or your team's legally allowed to manage them. It's not it's dissimilar to the distinguishment between contractor and employee, certainly. But this reduces your liability a great deal. So if an employee were ever to, sue for wrongful termination, a PEO will handle every step of that process. If it's determined, or if it comes to a settlement, or if it's determined you were liable for what happened, they will actually take care of the costs associated with that as well. Being that I just said that, you can imagine this is a very expensive option compared to just running payroll. Some PEOs will help recruit as well. They'll include all of the benefits that your organization is going to offer, whether that's health benefits or 401k or whatever it may be. It's all lumped into one. So essentially what a PEO is, it's the entire HR department outsourced for your business.
But you're kind of renting your employees from them?
You're technically renting your employees from them from a legal standpoint. Yep.
And so there are entities you can contract with who take the 25 people who are on your assembly line floor, and they become employees of that company, and then you contract with that company to supply the bodies to sit in those chairs.
Correct.
Wow. Okay. I don't know if that applies
So
to people.
yeah, but it is something that exists, and it's something that can be piecemealed out in uh certain PEOs, and other PEOs it's kind of all or nothing. You got to take it all, and you got to do everything through them or nothing. Insperity, many of you have probably heard Insperity commercials. They're relatively new to Pittsburgh, but that's the big one.
Okay, I want to go back to the slide about payroll services and what they don't do.
Sure. So they're not going to hire for you. They're not going to provide HR, all in HR. They're not going to be your fractional or your outsourced HR department, with the exception of a PEO, obviously. In terms of payroll, can you send them the hours for hourly employees? Can you send them the wages? You can do that. They will have timekeeping as well. In certain payroll systems, or certain payroll companies will have timekeeping systems built into it, and that will all automated in an automated fashion flow through to the payroll at the end of the day. But they're not going to calculate commissions and bonuses and things like that, right? So payroll can get complicated from time to time when you have a different structures, whether it's bonus or commission. That's going to have to happen internally potentially with a bookkeeper, but payroll services do not offer that support.
Okay.
Banking. So Deborah and I were talking a little bit how important these relationships were to folks through all of the CARES Acts during COVID, right? So you had PPP, you had ERTC, you had EIDL loans, EIDL, disaster loans. Bankers were the ones responsible for PPP loans, right? So for many folks, no matter what size PPP you had, you were going to your banking relationship, or you were just getting a generated email from that banker or from the branch or from the bank as a whole that said, "Hey, if you want to apply for this, this is how you do it. This is the portal. This is everything we need." Right? Many folks who had a good relationship with their bankers were spending time walking them through exactly what was going to be accepted from the bank's perspective, all of the backup that was going to be necessary, when the portal was going to open up, when they'd have access to it, and potentially maybe they helped you get into things a little bit earlier, or you had the opportunity to get in things earlier through specific bankers, right? There's probably a big discussion and argument around whether that was okay or not. I think PNC may have actually gotten sued around some of those things. But at the end of the day, those relationships were very important to many people who were able to get it in the very first round of funding, right? I think there's still funding out there that was, theoretically went somewhere else in terms of all of the CARES Act funding. So anybody who applied for a PPP within a time frame, if you were approved, you received the funds, right? But there was a period of time when that first 349 billion or 649 billion, whatever it was, there was a period of time where it closed after 2 or 3 days. The government said that those funds were gone, and there were many people that could never even log into their portal because they were having so many issues, or there were many people who never even heard from their banker and weren't comfortable applying for funds that could or could not be forgiven potentially, right? So the folks with really solid banking relationships were the ones that likely had a better path forward through that process and a more clear path forward. Also, there was potentially opportunity left on the table if you didn't maximize your potential there, and a banker would have been capable of walking you through some of that, or maybe reviewing your documents potentially. So out of all of these items, right, you have to file your taxes, you have to file payroll, but a banking relationship in terms of day-to-day business, having funds available to do that, is ever so vital and certainly key. So what can your banker do? Line of credit and loans obviously are the two biggest ones. They are the ones who are going to try to fight for the best rates on your account or work with you on the best rates for your account. Obviously, shopping around or getting a couple banks involved are methods to do that as well. They're in a sense an informal advisor for you in your business. So at different stages, there are different bankers who may only have a handful of clients. Many of those bankers will sit through you through an annual review of your financials and help you think through different vehicles or different banking setups that may be advantageous for you and your business. At the startup phase, that's very different than if you're a $5 million, $10 million business that's has foreign exchange transactions involved, right? Foreign exchange challenges are one of those things. And then treasury management is the biggest thing. So credit cards, sweep accounts, right? We had a couple banks fail last year right around this time. FDIC only insures up to $250,000. So there were many businesses panicking at those banks that had more than $250,000. Many banks have accounts in place where over $250,000 will be swept into other banks and then swept back in as you need it and as it falls below that $250,000 threshold. So nothing really to be concerned about for many businesses. The majority of small business in America is under $1 million in revenue. So that's the majority of us, right? But the point of all of that is banks do a ton of different things for many different businesses, all shapes and sizes. And it's worth a discussion with your banker to know if you're set up appropriately, or if maybe there's something out there based on your business and what you're doing and how much money is going in and out of those accounts, if there's something more advantageous that you could be placed in. So that's really where they act as an informal advisor, so to speak, for the business. Then what they don't do, they're not offering financial or tax advice for by any means, right? And at the end of the day, they're all incentivized based on the products that you sign up for with them. But what's important to them more so is that long-standing relationship. So a good banker is going to be more focused on building that than revenue on their end. Financial advisors. So financial advisors, many of us probably think of more on the personal side for you and your family, and planning accordingly for, everything in life from a financial perspective. So, really that's what they're providing in regards to personal finances and investments, but helping you budget and creating savings targets for you. That's where a good financial advisor can really pay off for those that may struggle or lack ideas and direction in that space. They can set up 401ks for your business. They can set up IRAs for you personally, obviously, as well. What they are is great connectors. If you have a good financial advisor, they get the majority of their clients from all different areas. They work with many clients who are CPAs, bankers, etc. They can connect you to many of these advisors we've already talked about today. So they are excellent connectors and typically come with a very large network that you can potentially pull from or leverage. And then what they won't do is, in terms of business advisement, they are not going to really help at all in that realm, other than the business's performance in regards to your overall wealth. So now that we've talked through all of these, what do you need, and when do you need it at different stages, right? So we've broken this out over the different stages for each provider. So stage one, very much in startup mode, still figuring out your product or your service, doing the basics in terms of business operations. Your options with bookkeeping, it's a cost associated with it. As we mentioned before, the more service you get out of it, the more expensive it's going to be. So ideally, your options at the startup stage are doing it yourself. Now, if you have a very basic business, you know how to invoice, you know how to apply a payment to an invoice in your accounting system, or you have very little ins and outs in terms of money ins and outs of the account. Maybe you don't even need an accounting system. You just need to make sure that you're paying your bills and you're staying organized on your end to get your tax accountant everything they need, and you're comfortable with your financial position based on what you're selling versus what you're buying, right, at the end of the day. So do it yourself. Don't What you shouldn't do is start a QuickBooks file and start doing things in QuickBooks without really knowing how to do it. Because what will happen is, as you scale and you need that QuickBooks setup and somebody else is going to do it for you, if things are disconnected, if your general ledger isn't set up appropriately or your chart of accounts are not set up appropriately, it's going to be a big mess to clean up, and that's going to be very expensive potentially for somebody to clean that up.
And I've heard that many bookkeeping firms, if you're still in the startup phase, will help you set up your QuickBooks so that your chart of accounts and the reports that it's running are great and in good shape and accurate, so that when hopefully you get to the point that you do need them, that you're not retrofitting your books. So it's worth a couple of hours of a bookkeeper to help you set up QuickBooks and teach you what you need to know. Highly recommend that.
Yep, absolutely. And that part-time bookkeeper that may be an option at this stage as well. They should be able to help you set up with QuickBooks. QuickBooks has a network into it, which own the software developer that owns QuickBooks. They have a network of QuickBooks experts or solopreneur bookkeepers. That is a good network to pull from as well, depending on exactly what what you need, and that's laid out accordingly depending on the services that they offer or that you're seeking, certainly. So from a bookkeeping perspective, that's probably where you are if you're a stage one company as defined in that very first slide. From an accountant perspective, annual taxes, certainly, potentially quarterly reviews, right? And if you're comfortable on the do-it-yourself mode for bookkeeping, they can potentially do that quarterly compilation, or they can take a look at your bank statements and give you an idea of the financial performance from their perspective of the company. So quarterly reviews or that write-up work may be an option in this instance. To me, that would be cost. You wouldn't balance the cost of that versus having a bookkeeper doing that on a regular basis, is likely how you come to that decision. I don't think one way or another when it's in your basic startup phase, or in a startup phase rather, you're likely just looking for the lower cost in that instance, because you're probably not getting a ton more from either or. and then annual taxes, right? They're filing those. They're helping guide you. They should be asking you a lot of questions when you first meet with them. They should be asking you questions again on an annual basis to see what's changed with the business from the year prior. Don't just send them a box of receipts or bank statements. Make sure you're having conversations with them about anything major that's changed with the business, because good ones should be identifying tax advantages for you, or potentially things to think about on a go forward basis. So, one of the items that's now come out is, for, I believe, for any business that just started in 2024 and beyond, there's now a new business filing with the government that you have to do within the first 90 days. It's almost like an annual census. For existing businesses, you have until 1/1 of 2025 to provide that, right? A good tax accountant's going to send you a communication about that to give you a heads up, potentially help you through that if there's anything complicated with it. So those are the types of items that you should be getting from them. There are tax code changes all of the time at all different levels. The right size firm should be giving you updates on that, or should be asking questions to make sure that you don't fall into any of those buckets. And if you do, that they're going to be helping you think through those changes accordingly. On the banking side, you may be at a branch, you may be starting to get to know a business banker. My advice would be have a relationship manager, whether that's at the lower level as a business banker, which is typically 1 to 5 million, sometimes 1 to 10 million in revenue. But oftentimes they have the ability to go under that $1 million revenue limit. Oftentimes the business banker at this level will work with hundreds and hundreds of clients. The good ones, they're very much volume based, but that doesn't mean they're not going to pick up the phone when you call. So you want that person that's going to pick up the phone whenever you have an emergency, and you let them know you're having an emergency, and they're going to be there for you no matter how many clients they have. So maybe asking the branch, or developing a very good relationship with the branch manager, or usually the branch has a business rep, and maybe convincing them that you have needs, or you'd like to be part of you'd like to have a relationship manager at the business banking level. And then other things to consider at stage one, if you're an S corp, we talked a little bit about this before. You have to pay yourself a salary instead of making a distribution. You can still make distributions. You have to pay yourself a reasonable salary. That's not defined in any form or fashion by the government, but you do need to be paying a W-2 and the employer-related taxes for yourself around those things. So this is so you can't avoid things like FICA and Medicare and Social Security, et cetera. And then always keep your financial advisor in tune with what you're doing business-wise. So stage two, you have employees, you have revenue, bookkeeping. Get QuickBooks set up, or QuickBooks alternatives are things like Sage and Xero spelled with an X, Xero. I would just do QuickBooks. That's the most commonly accepted one. As you scale and as you grow, if you have somebody working on it or doing it, or you're outsourcing it, they're likely to want you to be on QuickBooks anyways.
I
This
was
is
I was told by one of my peer group members just last week, she started on another system, some free online system, but these are all compatible with QuickBooks. So when you get to a certain scale, don't worry that you've invested a ton of time in FreshBooks or one of those. They're all exportable into QuickBooks. And so when the time comes, just bite the bullet and do it.
Yep, and the right service can convert it over for you. The right bookkeeper can export it and convert it over. There are services out there, for hundreds of dollars will convert it completely into a new QuickBooks file for you. So that's a really great point. And then probably time to consider a part-time bookkeeper, not necessarily from a complication standpoint. If the business is still very straightforward, but certainly from a time standpoint, you're going to have more volume. These are things that you should be paying, somebody an hourly rate that's far more reasonable and far less than what you would bill yourself out at hourly, so to speak, as the CEO or the owner of the business. From an accountant standpoint, certainly annual taxes can potentially be more complicated now, especially with employees. Those quarterly reviews are a great option now that you're going to have more expenses. You want to be certain that you're growing appropriately. I think in terms of these different stages of business and why we're talking about this today, the threat is that you grow too fast and you don't have scalable solutions and relationships in place for some of these things, or you invest in a lot of different things and you're not growing quickly enough to pay for all of these additional investments you made, right? But on any rate, having a good beat on your financials, likely on a monthly basis, is very important, I think, at this stage. And then certainly filing your quarterly estimates as the business is making money and you're taking distributions and you're showing income. What effective tax rate are you at and what should you be withholding on a quarterly basis? That doesn't have to be every dollar that you're supposed to owe. That's based on a couple different things, and tax accountants will help walk you through that, and they'll actually help make that calculation for you on a quarterly basis based on the due dates of those. Banking, you should have a great relationship with the branch if you're still at the branch at this point when you're in stage 2. A business banker should know you at this point as well. I think if you're an employee, you're scaling towards that $1 million, or that's your goal, it's time for that business banking relationship, certainly. And then you're beginning to think through credit, right? So lines of credit can be available to you at different banks, potentially, depending on the nature of your business, depending on the size of your business, certainly. But they're not bad to have. They usually have small annual fees, like $250 a month, depending on how much it is. But a line of credit can help you from bridge the gap from when your receivables typically come in to making payroll for every 2 weeks, right? These are serious things to consider. A credit card, if you get a credit card that extends you another 30 days, pay the credit card off, obviously. Don't use it as a line of credit necessarily. Use it to extend some things for 30 days until you pay it off. So, being mindful of that. I'm not saying everybody has to be an expert at forecasting cash, but lay out your cash outflows throughout the month and lay out when most of your billings are going to come in. Do that by date in a spreadsheet, and you'll have an idea of, knowing how much you're going to need to pay the credit card off,
Yeah,
etc.
that line of credit can be really relevant. There's a deep dive we did a few months ago about getting certified as a minority or woman-owned business. If you start to get government contracts and they pay on 60 or 90 days, but you have to provide the service, you need to bridge that gap between when you get paid for that big contract and the people and the supplies you need to actually fulfill it. Having a great banking relationship and an open line of credit can make all the difference in fulfilling that or not.
And there are many very small businesses that work with very large clients, for profit. And we have clients that work with Coca-Cola, and Coca-Cola is 120 days they will pay.
Ouch.
And those are the options you have to accept. So they do offer some financing for that is reasonable, but nonetheless, that is a cost that you're taking on as the business owner. So, balancing all of that, you likely have an advisor at the tax firm you're working with or the accounting firm you're working with. You can leverage that relationship to help you think through when to use a line of credit, when not to use a line of credit. Your banker as well should be able to do that at that point in time. And then payroll service, you need just do the payroll service when you have employees. It's going to take a lot of liability off your plate in terms of what's owed to the government and what's owed for those employees. Make sure you're registered in all the jurisdictions you need to be, as again, PAs, local, state, and federally. And then your financial advisor should help you think through how much of an asset your business is, right? You're not necessarily just generating cash for yourself each and every month. You're potentially building an asset of value that you can sell down the line. And a good financial advisor should help you think through some of those items. All right, so scaling up, right? We have a team. We're seeing serious revenue. We're starting to have multiples of sales from years prior. Again, bookkeeping. Make sure you have that GL set up. Make sure you have QuickBooks set up. Make sure you're utilizing and automating as much as you can. That should be a team. Maybe you've insourced at this point. Maybe it's an outsourced bookkeeping firm. And you should have timely financial reports each and every month. So within 2 weeks of February, you should have January financials closed, and you should see a P&L, a statement of cash flows, and a balance sheet at a minimum, right? Maybe you're beginning to track more key performance indicators or key metrics for your business that are both financial and non-financial. You should have an idea of the margins for your business, your gross margin. What are your costs of goods sold? What are your variable costs that as your sales go up, those costs go up accordingly with your sales? What are your fixed costs? When do you need to add to fixed costs at what different stages, right? These are all things you should be able to plan for based on good, sound, timely financials each and every month. Your accountant should be advising you on taxes fully now. You should be helping think through things like depreciation and bonus depreciation and what are things you should spend money on and when you should spend money on them based on different tax advantages. Did you have prior years losses? How are you going to use those to your advantage on a go forward basis as you become more and more profitable, etc. Banking, it's all about cash management at this point. It's all about treasury management at this point. You should have the exact setup you need to make sure that you're not going to have an issue from a bank perspective when you need to move funds around quickly. That you're going to have a little bit of room from a line of credit perspective to make certain things happen. Payroll service, begin to get more administrative support out of that, whether that's HR specialists that are you're pinging for some advice and support, employee handbooks, etc. Right? There's a lot of different administrative support they can handle with that. Maybe you're getting employees in different states and they can help register you in those states and get you set up in those states. PEO, again, 10 employees, service-based business, potentially worth looking at some point in time. And then financial advisors, this should be an annual review. You should really be digging into where you are financially. What are you paying yourself as a salary? What are you trying to distribute annually to yourself on a regular basis versus the profits and reinvesting into your business? That should be a resource for you to help think through those things. This is the point where you may or may not be considering an outsourced CFO. Maybe it's in terms of building better banking relationships. Maybe it's finding investors because you think you can scale from $500,000 in revenue to 10 million in revenue in 5 years' time, right? Maybe you need to determine what 5 years is going to look like, and you need somebody to help you strategically plan. This is potentially where you bring in an outsourced CFO for that project specifically, maybe not on an ongoing basis. So, that's just another option.
I know many of our small businesses like, oh, I don't want to be that big. I'm not going to get there. If you indeed do want to scale, and Kathy will go from one bed and breakfast to a chain of bed and breakfasts, I don't know, you're going to have all of these financial components in place because no one's going to give you any investment. They're not going to buy a portion of your company. They're not going to buy your company altogether. There's no merger or acquisition without great financial reporting and being able to work with your advisors to figure all of this stuff out. So we're going to speed through the last few slides because I know that all of you brought some questions, but all right, so you convinced me I need somebody. Chris, how do I figure this out? Who do I hire?
Yeah, so I think look, no matter what you're doing business wise, it's always good to network. So, whether you're going to events or whether you're asking trusted people in your network today to connect you with other folks in other areas, always network, right? Always set time aside to meet new folks. If you have a great tax accountant, take a meeting with another tax accountant, right? If you have a good banking relationship, talk to a banker at a different bank and see what they offer and see what you can potentially leverage for yourself and your business with the current bank you're working with, or maybe it makes sense to make a change. So, in the good relationships that you have today can continue to build those certainly. So, in terms of how you find these people, ask your best advisor today, ask your colleagues. You all are in peer groups. Ask those folks. Good people can connect you to other good people. Everybody knows that. And friends and family, you probably have many friends and family that have businesses as well that are utilizing some of these relationships, maybe more so than you are today. From a criteria perspective, it's cost at different points, or what it's cost at each one of those stages. These all are going to cost different at different stages, right? Your banking relationship manager is going to be dependent on what stage of business you're in and not necessarily cost related. But as your banking needs increase, your costs will increase as well, obviously. And then what's their overall capability? I think of that really a great example is in terms of your tax accounting firm. You have tax accountants who are solopreneurs who just sit in an office and they do 100 different company returns, and that's about it, right? And then you have offices that are massive public accounting firms that are doing very big jobs and everywhere in between. So, that 10 to 15 person firm that maybe has they have a sales tax specialist for those of you selling products. Maybe they have a valuation specialist for asking or pinging them on questions on, hey, how much is a business like mine worth at different stages? But they have multiple tax accountants. They have the ability to dig in and find answers for questions that you have that they may not have answers to at that time. I think that 10 to 50 person firm, you can find the right mix in there from a cost perspective, from an overall capability perspective, from a relationship perspective. But most importantly, you need to be able to trust them, because you're going to ask them, you're going to be vulnerable with them, you're going to be talking to them about things going good in your business, things going bad in your business, and you're going to be looking for them for help. And if you trust that they're going to do right by you, they're going to help you connect you to the right people and to the right solutions. So, in terms of where the heck am I or what should I be doing today, you're really identifying what stage you're in. And again, these are very general ways of describing stages of growth for businesses. So it's going to differ for some folks that may think they're in the same stage, certainly. But ultimately, at the end of the day, what are your goals? So, what's your goal in 2024? What's your goal over the next 3 years, 5 years? What's your big, hairy, audacious goal down the road? Right. And you can map all of that out and you can place into each one of those instances what you think you're going to need and when you're going to need it. And having that on paper is a big deal because you can identify those things ahead of time and you're not scrambling and putting out, you're preventing a fire versus fighting a fire at the end of the day. So when are you going to move to that next stage? And then it's going to be different for every business, but what are going to be your biggest hurdles at each one of those stages or in each one of those years? And each one of those hurdles is probably going to provide you a challenge, whether it's from a tax perspective, whether from a personal financial perspective, whether it's from a banking perspective, whatever it may be. And that will be an identifier of who to begin to seek in your network to connect you to good folks in those spaces that you can begin to have conversations. And it's okay to have a conversation with somebody without having the intention of working with them tomorrow or a week from now or even a year from now. It's okay to make that relationship and have that person in your Rolodex, so to speak, on a go forward basis. So look, best practices, plan your butts off, right? spend 2 days a year writing out everything for the business. Where do you want to go? Where do you want to be from a revenue perspective? How you're going to achieve that? But what are the costs associated with achieving that? And where are the gaps going to be for your business, not just from a financial perspective, but from an operational perspective? And revisit that halfway through the year. I spend a day in June revisiting my plan through that to that point in the year. I rework my plan or my forecast for the second half of the year. And I did that when I had 0 customers, and revisited in June when I had 6 customers the first year, right? So these are important things to do as business owners, and we'll identify a lot of things ahead of time that you're not going to want to scramble for again later. So what are the growing pains today? Those can be quick identifiers. Who's in your network? Continue to build that network, have them connect you to important people that are going to help you down the road, leverage all of those new relationships, certainly. And look, talk to other business owners. That's your best. That's where you're going to get your best advice. That's where you're going to find things to avoid in the future. That's where you're going to find best practices to better your business.
And
So I think that's it. Was that the last one?
yeah, we put this slide up here just to remind you that if you're working with a bookkeeper or an accountant or a banker and you feel like you haven't leveraged it all, well, you should try to make it work with them first, especially if they know you and you've gone through the process of getting to know each other. So, I mean, I think we talked about this whole session as like, what if I need to go find my first bookkeeper? But what if you already have a bookkeeper, but you're not getting monthly reports? Well, let's start by making sure your chart of accounts is good and you're getting your monthly reports and your accountant is seeing those monthly reports. I think you don't have to throw the baby out with the bathwater if things aren't working great. So
100%.
I'm gonna stop the recording in a moment, and Chris and I will stay here and we will be taking your questions. Chris's contact info is here. We will send anyone who was on this call the PDF as well. So if you missed something on one of the slides, don't worry, we will send it to you. So I'm going to stop sharing. All right. There's actually an amazing question. That's my question. So you raised